Alright, so I find on USD JPY, from my experience, we'll have a push in one direction and then it'll pull back really hard. So the whole goal of the market is to create that new high or low for the day in order to keep that trend going, right? So if we're looking at today, so we're going to be trading right here, but we're referencing the high and the previous high and lows. So I know that this is the low of the previous day and this is the high of the previous day, and like if you went on the daily, that would be the wicks of the previous daily candlestick. And then breaking it down, you have your range, and you can see how the 4 hour, as we're creeping up to it, take this line off, just know that this is the Asian start. Asian session. We'll have this signal. So this right here is already a strong enough bear signal because it has so much momentum. It closed with no wick. We have a lot of momentum pushing down. And we had the next candle that broke that. So in this case, you can't see anything in this area. So then you have all these candles consolidating at this point, 4 hour, 4 hour. So you have these candles pushing down, right? So the whole goal is to wait for the candles to close, and in this case we'd be looking here and like all in this area because we have rejection. All of this is rejecting this area and pushing up, but we have this resistance pushing it down. So that was our established zone. As we're approaching the range, we would have this all marked up because it's referencing off the previous day. We'd already have like these levels kind of in our head already. Asians approaching, the whole goal is to meet the previous high or low, which would be here. See, on this candle, it's not a holding price. So this is the ending of Asian session right here. And if I show you this, it might make a little more sense. Pull this up. All right, so this, the trading session already ended. You can see that this is my 8 o'clock right here, this 20. See this, these two green dots? It's your beginning of the Asian, and then your the highest volume areas in the chart. This is why it's very specific. Chart open. Oh yeah. All right, I'll share it to there. I'll share it to there. Don't worry. But if you're watching in Discord, I'm streaming in on YouTube. Right. Yeah, that'll be easier to where I don't have to switch all of it. Okay. So you have your, just let me know when you can see it. Can you still hear me? Okay. See, Aladdin's here. He's muted as well. So let me just send this link to this guy so he can join whenever he's ready. All right, so you'll see the 2 green dots show up. That is your 2 highest probable times to trade during Asian session. We know that Asian is our dominant pair for Asian, so we're expecting Asia to strengthen the yen. Well, if we are in this area, price only had to go 13 pips to 13 pip range to Asian to reach the daily low, and that's the whole goal of the entire market. The candle, the day's gonna open, it's gonna make a high, a low, and it's gonna consolidate. Asian's over. London's gonna start. It's gonna make a new high. Can't make a new high, make a new low, and then come back to New York, so on and so forth. So you have this small consolidation range because the yen can't really take over the US in a way. Like it's not gonna be stronger than the US, especially whenever we're in a overall uptrend. We're moving up. So larger picture, UJ up. So we had already kind of knew that beforehand. We're just in the larger time frames. So you'll see how Asian only pushed down a little bit, your 12, 13 at the most, and then pulled all the way back up. All the way back over even the opening price of the day. So it closed above that price. So we just consolidated the whole rest of the time. Not much activity for Asia. Like that's only this entire box is only 18 pips. 20 pips. And then it didn't break until London session, which would be this candle here. But then you have New York, which is your stronger session, taken from where London pulled, and then New York kicks in and takes it all the way the opposite direction because price couldn't make a new low. Price could not make a new low, so it made a new high. And in this case, USD JPY, USD is stronger, so it's going to have a lot more momentum pushing back the other way because we have so much volume. We have such a strong pair moving in the market. So you'll see Asia does it all of the time. Like in this case, we would have sold right here with anticipation that this would have continued down in hopes that it was going to touch the previous day low. That's what somebody would have traded during this time. Your 3, 4, and 5. Well, if you're not trading during this time, 3, 4, and 5. And you should see the same times at the bottom here. This is our world times. 3, 4, and 5, and then the 2 over here is going to be 15 and 16:30. If you can remember those times, you'll be able to trade Asian or New York on any chart. All the times are going to be the same. You have your Asian session and then your New York session over here. So to get in a little further detail, I feel that Asian is just the retracement of UJ. So like it had this move, it just needed Asian to retrace, and then it kicks back in again. Uses Asian, tests its zone, starts using New York again. New York pushes. And it's still pushing right now. So we same situation over here. Take all this off before it starts getting confusing. You have this entire consolidation range. As soon as we broke out, we tested it, ran up. Same thing. We got our high, our low, broke out. But this could fall back in. So we don't really consider a fake out a thing in the market because we're here entering it. Like the market's not here to give us anything. So this could just be the market reaching its resistance, and it could then pull back down because Asian doesn't have that much volume to continue just pushing price. It already moved $24 pips. So it moved more than what it did the other day, and it returned all the way back into that price. And then we could just see what it did, see what it does tomorrow. We'll see the results. So, I mean, I see it coming back down. I don't see it breaking through that 108.916. That would actually be rounded down to the whole number. So 108.9. On a higher time frame. Gotta remember the retracements. So I see UJ returning all the way back to 108.797. All your candles need to retrace. So I see it just pulling back. We're gonna pull back, test this area. See if it can bounce up. If it could stay above the 61.8, then we're going up one more time. But this is Fibonacci, so we can come all the way back down to 23.6 if it needed to. The farther it comes back down and rejects, the stronger the trend is going to be. But if we break just a lower one, see a retest like this, and then a push down, however long that will take. But that's a little too steep of a movement. I think we're going to stay somewhere up here around 108.79. $108.8. So something like that. We don't normally trade for Asian. So everything is just stuff that I'm explaining of what I saw to study and use as my reference going on whenever New York is here. So all of what I just drew up is going to come into play whenever we're over here. I'm going to say, oh yeah, this is going to be our daily high that we have to either retest and we're going to break it, or we're going to test it and we're going to reject it. So we'll add that into the option. So it'll come down, it'll bounce in here a little bit, break out, it'll come down hard, or it'll and just start shooting up. And based off of our daily market structure, it's fairly strong. But USD JPY pushes the majority for New York session, not Asian. Like in these cases, it only moved this much versus how much it moved the rest of the sessions. XRP is sitting at $1.42. Yeah, if XRP breaks $1.47, it's gone. $1.46. It can close above that. It's gone for the month. Does anyone have any questions? Yes, it is, because there's a lot more volume and volatility involved. You have a lot more money moving at one time than you do your normal currencies, because that's just going off of our base exchange rates. So you'll see that the crypto market moves a lot faster, but it moves the exact same way. Got all your same time setups. Same consolidation, everything indicates the same way, because we have these Japanese candlesticks to go off of. And the line chart. That's what I use, line chart. If we can pull up a line chart first, get our zones, and the candlesticks play right into there. And that's one thing I wanted to start showing you guys. I know saw that you said that y'all tried to do the box thing that I do. It's called box and chill. So you pretty much just take your higher time frame, you get your wicks on there on a previous candle or such. This one would be daily because we're trying to break the daily high and low for Asian technically. So we would just do this, get your high and low of the day, and you'll see how it just kind of fits in all your time frames. As soon as, and you can kind of tweak it a little bit, line chart a little higher, get more accurate price points to give you a much better zone in the long run. So as soon as we start closing above here, it's gone. But I don't see, this is XRP now. I can't say that it won't, but as soon as it breaks above $1.45 and closes, it's gonna retest it, and then it's gonna start going up just like it did the previous one, like it did over here. But I don't actively trade cryptos, especially with the start of our account. This account is strictly for the YouTube MyFX book, so I can keep everything updated and build the content of showing people that it's possible to build from 100. So if we enter the crypto market right now with just 100, we're risking 10% of the account each time as soon as we enter. So the risk is way higher than our reward right now based off of our account size. Once it starts getting higher, of course, I'll throw lot sizes in all day and have pending orders. But other than that, I want to be able to build the account up high enough, show people, get a withdrawal going, and then start getting into other crypto pairs. But until then, you just focus on USD JPY or GBP JPY, depending on which one is setting up for the day. And we'll just execute trades, keep it small, consistent, and just get some withdrawals out of it. The main goal is to get people to understand that it's possible to just put $100 in. If you can accept making a small amount consistently, then it's going to grow into a lot more in the long run. I posted the photo in the Discord about how you can take consecutive losses and come back with one trade and make up for everything. Yeah, that's the scenarios that I see happening for USD JPY. Were you guys wanting to trade USD JPY or GBP? What did you guys have in mind? Right. Yeah. I think you're telling me your times. Are you referring to the times at the bottom here? Okay. And you said 27th of April? From the 3 o'clock candle to the 1 o'clock candle. So 3 to 1. Yes, it should be. It should be the same. Because it's a 24-hour clock at the bottom. Okay. Okay. You executed on the 30-minute? Mm-hmm. Uh-huh. Awesome, man. I'm glad y'all were able to get in on that. Yeah, it was a beautiful trade. I got out all the way in here. We were still here. But I was sticking to the plan. If the move was going to happen, it would have been earlier towards the session. That's where just seeing the market move, we see a lot of the majority of the movement. It'll push first at the beginning of the session and then come back for the rest of New York, kind of accumulate and then push up again, all to do this. But it waited all that time because this is the start. Waited to do that here. So this is normally pushing, kind of giving us our signal, and it comes back for, it's already on top of the line to pull back and then come up. Like it would have pulled back here, then came up to make this leg. This, for it being under the resistance level at the time we were, goes against my plan, because normally we would set this trade, but it won't close below, it won't close on top of this candle. So it might come up to test it. It'll start testing it, acting like it's going to break out, and then get faked out, and it comes dropping all the way back down. So just to save ourselves, we took profits for this account, just securing the bag, trying to get that consistent profit going. But man, this was a beautiful trade. Like it couldn't have been any more perfect. As soon as it got out at 108.3, it was just gone. Was that the account that y'all were talking about starting? That you had asked me about? Well, just trying to get some analysis out there just to where y'all can see the possibilities, man. If I'm even thinking about kind of changing up our trading executions to do 3 at a time, do 1 out of 15 pip stop loss, 1 out of 50, let it run, and then let a runner go. So it'll run through the whole next day. Because if we were still in this trade, we would still be profiting for this Asian session push, which if you had a 50 pip stop, it would be somewhere around here to where you wouldn't even have to worry about it going past to lose any money. It would just kind of keep flowing up, where then you have options to make more money, and if you don't, it'll just hit your stop losses. But I'm still kind of working on that. I personally don't even like 15-point stop losses. You have a perfect setup, and the spreads will open up just enough and kind of tap your stop loss, and it'll keep going in your direction, and you've been out the trade. So that's the only thing I don't like about them. I just set them just to secure the bag if I know that the probabilities are kind of running low. Like sometimes we might only have gotten this candle out of the push, and then we would have already been pulled back maybe even 50% more than what this whole move was, just because that's how Asia normally moves. It'll push and it'll pull back. It pulled back all the way more than 50%. So even if you did have a 50-point stop loss, you would have still got hit, just because the price moved, pulled them down, because this is how the market gains or accumulates price. It'll pull it down, all your stop losses just got activated, boom, and they just sitting there, sitting in this area. Stop losses. Thousands of people's stop losses just got activated. Price pulls it down a little more, gives them that assurance. They might enter some more trades, or they got the confidence in the trade, keep it. Price pulls all the way back, hits the stop loss, comes all the way back down, continues. Happens all the time. Happens all the time. So our main goal is going to be secure the bag. Even if we did do 3 trades, that's 3 small amounts that we're just adding on at a time, so we have the choice to get out of both of them. But as long as we can secure the bag, that's all that matters. I stopped doing screen recordings on my phone because just trying to get the shot of what's going on, I'm already missing my trade or when I need to exit, because you gotta slide on the phone, you got different things you gotta press, so it just takes all that little extra time that's really important in the market, because it'll just inch up towards your take profit. I mean, the first day we had it not even 2 pips away, and it was reversed all the way back down, just because we were worried about taking the picture and showing everybody this is the profits, this is the profits. The market, you gotta take it. You gotta take whatever the market gives you. Oh, I was trying to press the button on the keyboard to make the sound. But are there any more questions that you guys have? So it depends on the direction of the candle. I take my higher time frames, and I know that this candle is bullish, so I start at the bottom, pull it to the, actually no, I'll take that back, opposite way. You can set it differently. If you wanted it to do your first one be the 100 and then your drag is the 0, you can go to the properties and kind of switch them around. But if it's a bullish candle, you go from the top, drag it down, you'll get your 50% levels. That's your retracement. That's pretty much your decision making if it's going to continue up or continue down. If we can hold that level, it's going to go up with the momentum of the previous candle. But if it's bearish, it's going to go from the bottom to the top. See how much 50% level respected it, fell down. But it's all preference. I also have like keywords to edit all these levels for the people who kind of learn differently. So still testing it out on the process on how to step it out and explain it on what they're looking at, because they already have to understand the 150%, 38.2, and your 61.8. You have to just know those levels to know, okay, out of this whole move, where's the 50% level to pull back on and retrace that whole move. If this can close more than 50%, we know that this is no longer bullish momentum. The bullish momentum died out if the bears can take over more than 50% of that whole entire structure. Right. Oh, we'll take all of that information and we're about to apply it right here. Got this high monthly. Broke off the 50% level. That's how I got that analysis that I posted just earlier. Slam through the 50% level. We're already testing 61.8. We just have to close. We have to close above those levels first. Other than that, we're just going to retrace. But yes, the box and chill method is definitely going to help out with your entries and just kind of waiting for the market to set up. Because not every movement is going to be its setup. Because you'll notice sometimes it'll just return all the way back where it was for the day. Kind of like this day. Right here. So like you had all this movement, but it closed all the way back even further than what it was this whole entire day. So if you're executing buys up here, anticipating it just to keep going up, you're already outside of the trading zone. Boom, market reverses on you. Because it's only going to move so much. And for New York, at the most 50 pips, maybe 75 if you're lucky on like a super good day. This isn't even USD JPY, and it's still going up, UJ, and the top off at 108.966. If we can break that, we're going to go up to 109.09. So this would determine if we can go above the 50 and start closing above it. Then we'll see that whole move to fill this wick to the left on our higher time frames. There. So we know in momentum, this whole entire move was a retrace from here to here. Pull back. This is probably going to be your 61.8 level on your whole entire move. Right on your 61.8 level. Bounce off and do this. Like that. And then you could probably take this whole entire range and put it like this, and then this would be your target. And this is probably going to be a there's going to be a wick to the left somewhere in this area. We zoom out, right there. So if we could break out, the entire move is going to end up over here. Over your longer time frame, because we have our large support level. Bring up our line chart. Got a huge support level right here. Bounce off of it. Retrace. Pull back. Test the high. Can we break it or not? If not, come back in. But tomorrow, if that scenario plays out, we would get an entry on that move tomorrow. Called box and chill. Put it in a box and chill. Show you what it wants to do.